Want a copy of my book, The Speculator's Mosaic, just check below, or it can also be bought on Amazon. About a little over a week ago, I was moping because we had another new low, or close to new low, in the price of silver, not the real thing, but silver futures, got down in COMEX to $61 an ounce. I'm much more mellow this week, even though today there's another drop in the silver futures from I think like 70 to 67. But in the meantime, we've had a rebound of as much as 35% in the price of the silver miners. I'm speaking specifically of one of the four that we like, Santa Cruz, which I remember as kind of it was something close to my heart as watching it. Got down to $5.97 last week, and then up over $8, a gain of over 30%. That's like a bull market in a week. Now today, those prices are down back in the sevens area. But the point is that I think that the ability of the manipulation of the silver price, the silver future price in COMEX, which has been going on for decades under the behest of some of the major banks who've made money by being on the short side. The ability of the prices that are reported on COMEX to impact the rest of the silver area, including the miners, is weakening. And I think it's weakening because of what's going on more than any other place in Shanghai. Today, while we have a $67 price for the silver future in COMEX, guess what we have in terms of the price of actual physical silver in Shanghai? 78. In other words, the gap between the manipulated, in my humble opinion, silver future and the real actual trading of physical silver in Shanghai is dramatically high, even a little higher than the 10% average or so it's been. Maybe we're up to, with today, 13, 14%. And what's so interesting about this also is that the whole manipulation process is working on that as well, because normally when you have that much of a gap, what you would have is arbitrage would take care of the situation. If in fact the silver future price of 67 would turn into actual sales of silver, then that would be one thing, because the people who now bought silver at 67 in the COMEX would arbitrage it, fly it to Shanghai, and in a matter of hours or a couple of days, whatever, resell it for 78. But that's not happening. And it's happening because, as I understand it, trust me, I am no expert on the intricacies of the silver trading market, but my understanding is that the various bureaucracies and abilities to get licenses and so on and move that around are making it difficult to do, and that's why that gap continues. But the fact that even now you've gone down only to 67, you've had, this is over on the gold side in particular, we've had these relatively low prices since January. The break in both gold and silver prices at the end of January, which has lasted for, roughly 5 months, and In the case of gold, in March, I believe, was the last time you had any sort of a rally bigger than the rally we've had in the last few days, even including the drop today. And so my hope is that that rally, were it to continue, specifically, I'm very focused on the prices of listening to Michael Oliver, and I'm sure he's got some technical numbers in the price of silver getting up into the mid to high 70s in COMEX that would cause him to say, all right, the breakup in a major increase in the price of silver is underway. And as we know, you have enormous demand for silver, which is continuing, mostly in Asia, and probably number one in India, who is using it for on the industrial side. And so what I'm saying is, hang on to your silver mining stocks. Take a look at the 4 that we recommend to buy. We continue to be very bullish on the outlook for silver miners, and we think that this period of low consolidation with silver in the prices of in the 60s and or 70s is coming to an end. I hope that you enjoy our videos, and please press like. It'll help us a lot.